Hello everyone, this is Florian Munsch. I'm here for Mining Scout and I'm today joined by Ian Stalker. Ian is president and CEO of Pasofino Gold, and Pasofino is developing the Dugbe gold project in Liberia. So Ian, a pleasure to have you here.
Thank you very much, Florian. It's been a long while since I've been with you in this presentation, but it's a great time to bring you and your audience up to date. So thanks for the invitation.
Yeah, for our audience. So I'm a little bit biased here because I'm a big believer in the story and I'm an investor. So that being clear. But Ian, I would like you to give you the opportunity to give something like an elevator pitch. So what is the company about and where's the project located? Give us some basic facts.
Sure, and I probably would admit that I'm a little bit biased as well, because I'm a shareholder in the company and I'm 100% believer in the project, which is why we got involved in it first in 2020, when we picked up the opportunity of developing the Dugbe project in Liberia, Goldprojekt, from the company that owned it at that time, which was Hummingbird. We put our company Pasofino together in the early part of 2020. And since then, we got ourselves listed on the Toronto Stock Exchange. We raised an initial $10 million to get the project up and running. And we've been working on what we call the Definitive Feasibility Study, or DFS, since the beginning of this year, 2021. And that definitive study has involved exploration drilling, infill drilling, as well as the routine studies you do in terms of understanding the engineering and the infrastructural needs of the project. But the project itself is in Liberia in West Africa, and has got certain key benefits, Florian, that other companies don't have. And if I may, I'll just enumerate one or two of them. Yeah, sure. Liberia itself is a very stable little country. A relatively small population on the west coast there, but one predominant religion, which is one of the challenges some of the other African countries face, unfortunately, that they have perhaps two and sometimes three religions, which can create problems within the local population by people who want to effectively make make some drama. But we are a Christian country in Liberia, just over 4.5 million people. There is some mining knowledge in country. There is a gold mine run by a company called Avasoro in country, and there's a very large iron ore mine run by ArcelorMittal, who are a pretty well-known company in the world today in terms of production of steel products, etc. And they've been running that iron ore mine for probably about 30 years in country, and are intending to develop it with a further $800 million worth of capital over the next few months. So we find Liberia a very stable country. It doesn't have the dramas of some of its neighbors to the north and to the west, to the east rather, which include Burkina Faso and Mali. We don't have those challenges, and we find the government extremely supportive of us. And that support, Florian, is exhibited by the fact that we have already in existence between ourselves and the government a mineral development agreement, an MDA. And in that mineral development agreement, we've got a situation where taxes are fixed for the next 15 years. No changes can take place, either up or down, which gives us a base to work from. Imported goods for the mining sector are duty-free. Corporate rate of tax is 25%, and all expenditure from day one on this project, even from the Hummingbird days through to what we finish, is offset against tax in terms of profits when you're in operation. But the most telling indicator that we have is that the government of Liberia has agreed with us that should the gold price hit $1,500 an ounce. Today we're trading at, as you know, somewhere around 1,770. But should the gold price reach $1,500 an ounce, then the government will reduce the import duty it currently applies to all petrol products, so diesel, petroleum, lubricants, etc. They will reduce that by upwards of 75%. So huge incentive for us to go ahead and make this open pitable opportunity in Liberia work. So the fact that the government's willing to do that, the fact that we are in Liberia, which has its own coastline and therefore has a port that we use called Grenville, and the Grenville port is only 70 kilometers away from our mine site at Dugbe. Now, 70 kilometers in the African context is nothing. by comparison, I built a mine in Guinea, which was 880 kilometers away from the port of Conakry. And it would take me 3 to 4 days to get the equipment up there. And that's got a cost.
Yeah.
For us, getting equipment from the port to the site in 70 kilometers away, it might take us 4 or 5 hours just because of the conditions, but it's an awful lot cheaper than the alternatives that the other mining companies in landlocked Burkina Faso and even northern Mali have. You know, they pay a lot more money. So we've got not only a good country, but we've got an economic advantage from proximity to the port.
And also you got another advantage, that is that yourself and the team is highly skilled in working in African jurisdictions. You have the track record, you have built mines in Africa and Western Africa. So this is going to be the next one probably.
Yeah, thank you for saying that. We do have a pedigree in West Africa in particular, where I was with Ashanti Goldfields for almost 11 years. And that company moved from being 120,000 ounces a year production unit of gold to 1.7 million ounces. And we put mines across different parts of Africa as a consequence. So yeah, myself and the team that we have, I think have got the right background and experience to be able to move not only the project into the end of the definitive study, but also to the consideration that it moves from study into the construction phase. The talent and the experience is there. So that adds to it. But the government and that is the real mix, because there's two types of resources, Florian. There's resources in the ground, and then there's resources that come from people and your relationships with other people. And that's why I emphasize that really strong relationship we have with Liberia and the positive feedback we get from that government who want us to develop this mine.
Yeah, and they will get the taxes from it, so it's beneficial for all parties. Before we dig in deeper into the company and the resource it has, I would like to emphasize the general plan or approach for Pasofino Gold. So it's a little bit unusual because Pasofino doesn't own really a gold project or having the mineral rights yet, but it has the right to acquire 49% initially by delivering a feasibility study. And this feasibility study is well underway. Can you elaborate?
Sure. What we negotiated with Hummingbird, who are a UK AIM-listed company, back at the end of the beginning of 2020, all the way through 2020, is that we have the option to acquire 49% of the project by completing a definitive feasibility study on Dugbe. And that is what we have set out to do. And you and your listeners, Florian, can be very comfortable in knowing that the definitive feasibility study will be completed by the second quarter. I'm optimistic in believing it's going to be by the end of April of next year, so only 4 months away. And at that completion, we will be 49% owners of the Dugbe project. So if I say that in terms of a mineral inventory, I have to be careful the words I use because 43101 doesn't allow me to combine all the gold together, but a gold inventory of over 4 million ounces, it would mean we'd be the owners of 2 million ounces at that stage.
And however, with the remaining 51%? So
correct.
How's the plan here?
That's the important point. You're 100% right to ask the question. So at the stage when the definitive feasibility study is completed and we are 49% owners, there is a legally binding agreement between ourselves and Hummingbird, who are then going to put PUT, their 51%, into Pasofino. So Pasofino becomes the 100% owner of the project. Hummingbird get equity in Pasofino just as any other investor would get it. But Pasofino owns the 100% of the project. And at that stage, of course, corporate activity, corporate relationships, because we own 100%, are very clear. No one has to worry about who owns what and who controls what. It's very clear that at the end of that period, we will be the 100% owners of the project. And indeed, you know, things may change between now and that period, which may be better, but we will wait and see what comes out in that regard.
And there are two very important news which were issued in the couple of months. And could you elaborate on the mineral resource estimate, which was renewed?
100%, Florian, and that was really a very large boost to the project economics. We already had put out a preliminary economic assessment earlier this year, and it showed that at a $1,550 gold price, we had an NPV after tax of plus or minus $650, $700 million. And that was based on the resource as we knew it at that time, which included, because preliminary economic assessments are allowed to include both inferred and indicated when you do the evaluation. But of course, in the definitive feasibility study, you have to have a much more reliable definition of your resources. And so you have to bring in only the indicated and measured ounces, which will convert during the study into reserves. At the moment, they still are resources. So our MRE was put together after we had completed the infill drilling at both of our open pittable areas, Dugbe and Tucson. Mm-hmm. We were happy with the work that was done, and we took the information with us over to SRK in the UK, the well-known consulting geological group. And we sat with them for some time, and out came the results that the total mining inventory had increased beyond 4 million ounces. So it was almost like 1 million ounces more than we had previously. Mm-hmm. But I think most importantly for us is we were able to define during this update that there is a high grade domain which runs just about 3 million ounces at 1.6, 1.58 grams per ton gold. That compares very positively with the previous grades we were reporting of 1.4 grams per ton. So you can see we've got a significant increase in the head grade, and that head grade, my colleagues tell me, is a diluted grade already. So it's the grade that you would expect to go to the processing plant. So it means that for every ton of ore we are now putting through the plant, we've got more gold per ton in the early stages. So not only have we increased the overall inventory, but we also have got this significantly large package of indicated and measured ounces, 3 million ounces. So you can see a very clear path to a 10-year life of mine in the study, maybe even longer, producing somewhere around 180 to 200,000 ounces. And I think the fact that the grade is better should drive the economics of the project more positively, because you will have a lower cost per ounce and potentially a lower capex, because with the higher grade, obviously we will be looking at perhaps a smaller footprint of the plant size. Initially, we were looking at 5 million tons per year, but maybe we can do a 4 million ton per year operation now, which is obviously cheaper from a capital point of view, and still make plus or minus the same number of ounces because of the higher grade. So we were delighted to get the MRE out, and now moving us forward into the study, which we'll talk a bit later after we talk about the second announcement that came out, Florian.
Speaking of delighted, so talk about the second announcement. We just closed, or not closed, but announced a financing deal here, which brings Pasofino Gold into financing-wise well into the stage of finishing this feasibility study.
Correct. Look, our aim from day one was to complete the feasibility study, because we knew obviously that is the trigger by which we get very clearly the 49%. No arguments, it happens. Mm-hmm. But the markets over the last year have been up and down, as I'm sure you and everyone else knows. And so we didn't want to over dilute the company at different times. So we only brought in maybe 10 million to begin with, and then a further sort of 8 million later on. But we always knew we wanted, right from the beginning, our budget said you will need, in Canadian dollar terms, about $25 million. So this last portion has come in now, and it's come in, interestingly enough, from two sources. One is a strategic investor that happens to be a gold mining company from Turkey. These guys have their own operations in Turkey and development projects, etc. So they're a very experienced bunch of people. They had a good look at the project, as did one or two others. I should have to tell you, Florian. It wasn't just one person who looked at it, and we had several expressions of interest. But we chose this Turkish group. We like what they offered. They have not been difficult in terms of standstill. So it's important, I think, for you and the investors to realize that although they're in for $4.5 million, they only hold a small percentage of the company, and they have a standstill agreement where they can't acquire any more until such time as we've got the study well and truly finished. And that means until we get proper investment returns for all our shareholders. And then we brought in, that's the second part, about $1 million from friends and family, shall we say, investors who've been there for a long while and have put money in. So that gives us roughly about $5.5 million, which is more than enough to complete the feasibility study, and in fact allows us the potential, as we get towards the end of the study, to maybe have a look at one or two other targets that we like from an exploration point of view that might also create a bit of excitement outside of the economics of the project. So we are set to go, Florian. That's the message. One, a better MRE, which means the project economics are looking sweet, and two, we've got the money now to complete it. These worries just disappear, and my shoulders are about 6 inches higher now than they were previously with the weight of all the challenges on them.
I think so. Okay. So yeah, we have a clear path before us. So could you, to finish the interview, give investors a little look forward? So what's going to happen news release wise, company development wise in the let's say first 2 quarters of next year?
Look, that's also a very good question right now, because I'm just, before I came on to this interview, I was just off the phone with our COO, John Saunders, and he's been busy with the study, and we are now getting information flowing, because we're at this stage of it now, where we're beginning to see that the pit slopes, the geotechnical work that we've done, is beginning to pay dividends. And there's a real opportunity that we'll be able to reduce the stripping ratio as a consequence of tightening up the slopes in the pit, which has obviously got economic benefits, because the less waste we move, the more money that's available for producing the gold that we want. We've also been doing some metallurgical, finalizing the metallurgical test work, and some of the results from that are coming out positively. So those two will be released in the next short while. And over the next 2 months, you'll start to see, Florian, press releases coming out from us just generating the knowledge that this definitive feasibility is on track. The numbers are looking as good, if not better, than we previously highlighted, and that we have the environmental concerns taken care of. We're applying for permission from the Department of Environmental Affairs in Liberia for permission for environmental operation of the plant, and so on and so forth. So the next 2 months will be a series of positive PRs coming out that highlight the opportunity and the progress we're making on it. And then, as I mentioned, maybe, just maybe, towards the end of it, we'll do a little bit of exploration because we can. And if we get some sweet results there, then not only have you got the bread and butter of your DFS, which will be a good quality, you also have the added excitement of potential extra resources coming in. And being in Liberia and being associated with the government of Liberia the way we are, we're just in the right country, the right location, and hopefully the right market to give all investors, including you and me, Florian, as we introduced ourselves at the beginning, a good return on our investment. I hope it works out, and I'm feeling pretty confident it will.
Wonderful closing statement. So thank you very much for the interview. This was Ian Stalker, and President and CEO of Pasofino Gold. Thank you.